Hello and welcome. You're watching Business Today Television. I'm Tanya Neja. Well, it's the season of IPOs, and today we are going to focus on Utkarsh Small Finance Bank IPO. The bank will begin its three-day initial public offering on July 12th, and the bank provides a variety of deposit products with a focus on rural and semi-urban areas. The IPO comprises fresh equity issues of up to 500 crore rupees. So to discuss more about this IPO, I have with me Mr. Govind Singh, who is the MD and CEO of Utkarsh Small Finance Bank, and we also have with us Mr. Sarju Simaria, who is the CFO of this bank. Gentlemen, thank you so much for taking the time out and joining us here on Business Today Television. And let's talk about the IPO size first. I mean, the IPO size is 500 crore rupees, and there is no offer for sale. So, how are you, gonna utilize the net proceeds from this particular issue?
IPO. This will supplement our Tier 1 capital. As you know, at the bank, we require a capital adequacy ratio of 15%. We are today at 20.6%. For further growth of capital and business, we need additional capital. And, for any bank, capital is a raw material. So this capital will be used for further expansion plans of the bank.
Okay, absolutely. And also, you have significant exposure to microfinance. I mean, every year you try to reduce that. Correct me if I'm wrong. But what's the plan going forward? And also, you have 31% of the gross loan portfolio in Uttar Pradesh and 26% in Bihar. So, do you think that your business could be, negatively impacted by a regional economic slowdown or natural calamity?
So one is that as far as microfinance is concerned, so we started in 2009, 14 years back as an NBFC MFI only. So microfinance is our core business from very beginning, and that is how we built this institution. As I mentioned, since 2009. So that still remains our one of the core businesses, and this is one business we understand very well. And you also spoke with geography. I think again the geography we understand very well because when we started in 2009, we started from Eastern UP and then went into Bihar. And these two geographies we have served well. And as one part is that the microfinance will remain a mainstay, will remain one of the significant business for us. We might have seen decline in the overall share of microfinance because it's not because that portfolio is not growing; it is growing, and we intend to grow that also. The only thing, other portfolios that we have created during last 5-6 years time, there the growth rate is higher because of the low base rate, effect right now. As far as these two geographies are concerned, I think these two geographies are historically, low penetrated from the credit angle, from the financial inclusion angle. UP is around 5% of overall credit with 25 crore plus population. Bihar is around close to 1% of the overall credit in the country. With very close to a nine crore population. I think these two states certainly require much more credit flow, and we don't foresee any challenge as far as any downturn is concerned because I mean, these are very, there the requirements are huge, the needs are very huge, and we are trying to meet those demands only. Having said so, it's besides these two states, we have put our, gone to multiple states now. We're in 26 states and UTs, and gradually our portfolio in other those states are also going up. And you must have seen that there is a decline in the overall share of Uttar Pradesh and Bihar in our overall portfolio also. And it seems, that trend or the trajectory will continue in terms of overall growth and the growth of portfolio at other states also.
Okay, absolutely. And also, sir, if you talk about deposits only, the bank depends on a limited number of customers for a substantial portion of its deposits. And correct me if I'm wrong, but the top 20 accounts for over 21% of your deposit base as of March 2023. So, is this something that we should worry about?
No, well, one should not worry for two reasons. One, when we started as a bank, we had having a large loan portfolio, and we had to retire our old debts. So we relied upon some of the, we can say wholesale depositors at the time. Some of the deposits are still with us, but if you must have seen the ratio or the overall share of wholesale deposit is coming down over these years, and the trajectory or the trend will continue. That is one part. Second, most of these loans, almost 85%, will be in the non-callable category. So these are not volatile, short-term loans. In fact, just to mention that we are very good as far as overall liquidity is concerned. We are generally a lender in market, in money market and those markets, and we are always net surplus as far as liquidity is concerned. So nothing to worry about that part. Normally, deposit franchise takes little longer time because getting money and then building balances on those accounts takes little longer time. You did mention about 20 percent with the top people, but at the same time we have increased footprints across now. We have opened a lot of branches, and close to 2 million is our customer base as far as deposits is concerned, and balances are building in those accounts. So this percent is certainly coming down over a period of time, but even this level is not, nothing to worry about this part, because these are non-callable and long term deposits.
Okay, absolutely nothing to worry about. That's the word coming in. And let me now come to the business side of the story. I mean, can you take us through your loan book? I mean, what is the loan portfolio growth of your bank at this point in time?
So we have a gross loan portfolio of 13,957 crores. Actually, for FY23, it has grown 31% year on year. The loan disbursement is about 12,442 crores, which is growing 37% year on year. If I
Okay.
take FY21-23, in between, we have grown as a CAGR of 28%. And maybe if I want to add the breakup between my loan book, we just spoke about micro banking having 66% weightage, and the non-micro banking, which is materially a secured book, being 34% of the total loan book.
Okay, and lastly, gentlemen, I would like you to, share any message that you want to give to the retail investors out there who are really planning to invest in this particular IPO.
So Utkarsh, as an institution, is 14-year-old institution, and as a bank for last 6 years, we have some niche area. We're very high on technology, and especially in some of our pockets in hinterland, in semi-urban, rural area, we're very very strong. The understanding part also, we have very strong board and strong management. And if we see overall, financials of the bank are really, we have done really well over these periods. We have very strong institutional investor base from very beginning. So, and and we have been very reasonable as far as the pricing of the issue is also concerned. So I think we expect that the overall trajectory of the bank looks good, and as far as performance of the bank is concerned, that looks that we are on track. We are on right track.
Okay, absolutely. That's the word coming in. And on that wonderful note, thank you so much, Mr. Singh and Mr. Simaria, for taking the time out and sharing these wonderful insights with us. And all the very best for your IPO.
Thank
Thank
you
you.
very much, Tanya. Thanks a lot.
Okay, so with that, let's wrap up this edition. But stay tuned for all the latest market updates. And don't forget to follow us on our social media platforms like Twitter, Facebook, LinkedIn, and Instagram. So stay tuned, and many thanks for tuning in.